Right. I want to talk about the Bitcoin bull market multiple, which is something that confuses a lot of people because they don't understand that price is set at the margin. And in this video, I want to just talk a little bit about that and put it on record so people always have a place to come back to understand how this works. One thing that you need to understand about Bitcoin is that while there is a new incoming supply every 10 minutes, there is a final total supply, right? What we would call fully issued supply of 21 million. So while there is new supply coming in, that new supply is less and less, and more buyers come into the market, the daily supply is less and less entering the market because those coins are just being sucked up. And in the last bull market run, there's a lot of people with their own impressions of what this multiple is, etc., etc. And in the last bull run, Bank of America put out their own multiple, which, I'm not saying it's better. It might be certainly more credible than a Twitter analyst. So I like to range between certain numbers. Again, I don't want to assume that Bank of America's number is exactly 100% correct because how much they get wrong, but I can adjust things to allow a safety of margin. There was a Twitter analyst by the name of Willy Woo who said that the multiple is 3-1. And Bank of America suggested at the peak of the bull run, it was 118-1. So somewhere in the middle, there's the truth. Now, what is a multiple? What a lot of people think is that if I put $1 into an asset, the market value of that asset went up by $1. That's not how it works. That's not how it works. And most people, I can understand, most people don't have any experience with markets and assets. So they just think, okay, well, if I add $1 to this, I'm going to get $1 back. But it's not. The price is set at the margin because the asset is in low supply, right? And there's not many people selling. So, for example, if I own 100 of these cigar cutters, and by the way, if you are a cigar fan, this Colibri V-Cut is one of my favorites. So if I own 100 of these cutters and 80 of them are owned and held by different individuals that are never ever going to sell them because they know it's the best cutter in the world, now let's say there was demand for 100, which would create an equilibrium price, because if there's 100 people that want to buy 100 cutters, now I can sell all of these for $10 a piece and we all are happy. Right? Now, let's say 80 of those people say, I'm never going to sell this because it's great. I like this cutter. So now they hold this cutter and they never ever sell it. Another 100 buyers comes into the market, except now they've only got 20 people that want to sell. So those 20 people that want to sell push the price up on this. So even though there is $1, 10 new dollars coming into the market for every new sale that's coming in, the price is going to be higher. So those 20 people go, wait a second, now there's 100 buyers and I want to sell, but there's only 20 cutters in the world because it's finality of supply. He didn't make any more. There's 20 cutters in the world. So you know what? There's 100 buyers. I think you could probably give me $15, right? So the price is set at the margin of the supply. And that's what people don't seem to understand. Now, with this bull market multiple, all it means is if $1 goes into an asset, what does the market cap go up by? And you can measure this in all different asset classes and everything else. Now, the one thing that you need to be aware of is that this is never final and it's never static because the market is always moving, especially with Bitcoin. It's trading 24/7. It's always moving. The Bitcoin market has been trading longer than the U.S. stock market by now. A lot of people don't know that when they talk about history and trying to get an asset that has had stability for a long period of time. The Bitcoin markets have been trading for longer than the U.S. stock market because it's 24/7 every day, 365. So there is a lot of stability in the Bitcoin markets that a lot of people don't realize because they think, they want it to be, they think that the amount of years that it's been around is more important than the amount of time. I think every minute that it is around is much more important than the number of years. And right now, it's been trading longer than the U.S. stock market. So that's fantastic. Now, going back to it, Bank of America put out this report, and it basically tells you their opinion at the peak of the bull run, at the peak of the last previous bull run, when the total market cap of Bitcoin was $1.1 trillion, what they think $1 going into the Bitcoin market price could increase the market cap by. And what they came out with, and there's an article on Bloomberg that you can go and read, was that they thought $93 million could boost Bitcoin's price by 1%. Now, considering the market cap was $1.1 trillion, boosting the overall market cap by 1% would mean $11 billion. So they think if $93 million comes in, the market cap of Bitcoin was going up by $11 billion, which is fair, because when you've got an asset that's so controlled tightly in its supply and controlled because nobody wants to sell, just like the cutter, and there's not much coming in, not much new supply coming out, it's going to get tight. It's going to get tight, right? It's going to get tight. No matter how hard you try to bang it, it's going to stay tight, right? So, Bank of America said $93 million could move the price of Bitcoin by $11 billion. That is 118 to 1, roughly, right? Let's just say 100 to 1. $1 coming into the market will boost the price of Bitcoin by $100. That's a lot, because it would take 20 times more money to move the gold price, gold market cap, by 1%. And the reason for that is that gold, unlike Bitcoin, has a flexible supply curve, because Bitcoin has a fixed supply curve. Gold has a flexible supply curve. If gold goes up to $10,000 an ounce, there'll be so many more gold miners, you'll be looking for gold in your backyard. I'll be looking for gold in the garden. I'll be like, hey, listen, $10,000 of gold, let's get some of this gold out there. So it is an infinite supply asset. It has to be classed as that. Just because the gold takes a long time to come out the ground, that does not mean it has an infinite, it does not mean that the supply is constrained, right? It just means time and resources. Because if gold goes up to $10,000 tomorrow, there will be VCs pumping money into gold mines like you've never seen before, trying to get the gold out the ground. So, and it's the same thing with houses, right? If the supply of houses goes up, what's the first thing a city does? Issues more permits. Issues more permits. More competitors enter the market, and they can now build property because they now have more permits because the price went up. What happens to Bitcoin if the price goes up? Absolutely nothing. TikTok, next block. It continues like absolute normal. Nothing changes, nothing gets influenced, nothing moves. Oh, $1 trillion wants to come into Bitcoin? Cool story. The supply is fixed. The issuance is fixed. And that's extremely important. That's what allows this type of bull market multiple to exist. Now, there'll be people that will argue, yo, that sounds crazy. Sure, it sounds crazy. Absolutely, it sounds crazy because we've never seen anything like it. Bitcoin sounds crazy as well. Bitcoin sounds crazier than gold for sure. Bitcoin sounds crazier than real estate for sure. Guess what? It's happening. So what do you mean it sounds crazy? Just because it sounds crazy, does that mean you disregard it? And that's what's going on right now. A lot of people are not understanding that the price is set at the margin of the supply. Because if the supply is not in the market, it doesn't matter. Now, of course, as the price moves up, more supply will come into the market, and that will change things again. So this multiple is completely flexible. But what Bank of America says is that for every $1 billion that comes into Bitcoin, the market cap goes up by 100 billion. By 100 billion. In fact, I'm going to work out right now. if you get 100 billion coming in, right? I'm not good at this math off the top of my head. Right. If you get $100 billion added to the market cap, so that's 1 billion, right? Boom. Because that's what they're saying that the multiple is. So $1 billion of cash increases the market cap by 100 billion, and that adds $4,761 onto the price of every Bitcoin. This is phenomenal. We've never seen anything like this. We've never ever seen anything like this. So, for example, let's say the real estate market is $330 trillion. $330 trillion worldwide. Do you think that as Bitcoin continues to grow, as Bitcoin continues to gain adoption, do you think that $1 trillion, one single $1 trillion, might find its way into Bitcoin over the next 20 years? Considering real estate is $330 trillion. Do you think $1 trillion of value could leave real estate and find its way into Bitcoin? I do. So if we take that trillion, right, and we times it by 100, it's $100 trillion market cap. And we take that $100 trillion market cap and we divide it by 21 million. And that gives you just 1 trillion coming out of real estate based on, if Bank of America is right, 1 trillion coming out of real estate going into Bitcoin over the next 20 years gives you a $4.8 million Bitcoin price. That's not including the stock market. That's not including bonds. That's not including gold. That's not including anything else. This bull market multiple is amazing. And the fact that Bank of America, analysts at Bank of America will put their name on it and stand behind it is extremely weird. It's extremely weird. But they did it. They put it out there. They put it out there confidently. Now, even if you just assume it's 50% correct, let's assume it's 50% correct, right? You're looking at a $2.4 million Bitcoin price over the next 20 years. Better than any investment that you have done, guaranteed. Better than anything you have done, guaranteed, because the price of the asset is set at the margin of the supply. And that's important to understand. Especially about Bitcoin, it's important to understand. The price is set at the margin of the supply. Because I'm not selling. And here's the other thing. As the price goes up, I have less incentive to sell. If the price goes up, what does that mean? If the price goes up, it means that adoption is growing. It means that I make more of a dollar profit, right, or a pound profit. It means that as adoption grows, there's more lending facilities coming in, so I don't even need to sell. As the price, and if I decide to move back to a tax-paying jurisdiction for whatever reason, I now have potential taxes to pay on the profit if I was to sell. So wait a second, I got a finite supply asset that I can just hold on to, that I'm incentivized to not sell because the price keeps going up, the HODL rate keeps going up, the supply keeps crashing, the price is going to keep going up because it's a finite supply asset. And if I sell it, I got to pay taxes and fuck paying taxes. So I'll just borrow against it. So I'm now, as the price goes, this is the thing that people misunderstand. As the price goes up, I'm incentivized to hodl. I'm incentivized to hold. I'm incentivized to do that. Most people think as the price goes up, you're incentivized to sell. That's the previous buyer of Bitcoin. That's the current holder of Bitcoin that doesn't understand how financial markets work. The new buyer, as the price goes up, they're incentivized to hold closer to their chest because they understand that scarcity is the most important thing and you have access to credit facilities to allow you to borrow against it. And so if this bull market multiple is right, as more and more starts to trickle into Bitcoin, the price goes up, I'm more incentivized to hold on to my Bitcoin, which then adds and fuels the multiple. Because right now it's like 75% or something like that of all the Bitcoin that has ever been bought never moves no matter what happens to the price. As that goes up, and Goldman Sachs or BlackRock or whatever shows up to my door and says, hey, we can provide you a facility to liquidate, to generate some liquidity on your Bitcoin without having to sell it at great interest rates. Cool. Now it goes up to 85% a HODL rate, permanent. Then it goes up to 90% a HODL rate, permanent. And pretty soon you get to the point where $1 going into Bitcoin turns into $118 of market cap, because of the supply constraint on the asset and because the price is set at the margin of the supply. So I hope that helps you understand how the bull market multiple works. And by the way, as the bear market happens, the multiple shrinks. The multiple shrinks. Why? Because you have the same amount of supply coming in and the demand dries up. So the multiple shrinks. And this multiple is always going up and down like this. Nobody knows exactly what it is. That's why Bank of America released it at the time where Bitcoin was at its highest market cap, which was $1.1 trillion. So at the peak of supply constraint, you got 118 to 1. That's insane. That could send the price to levels you've never seen if the buying just is relentless. And now you got an ETF coming. Now you got BlackRock coming. Now you got JP Morgan starting to talk about it. You got Goldman Sachs in the game. You got all these people, institutional hedge funds, and then the most important thing is you got $130 trillion of worldwide wealth controlled by 500 people in the world. How many of them do you think you need to convince to start causing this? Just go look at what happened to the price of Tesla between 2019 and 2021. When the Russell 2000 fund managers realized, shit, I need Tesla. Sent the price from $11 something to $400 a share. So there is a value in understanding that price is set at the margin. And I want everyone to understand that. Price is not dictated by the hodlers, right? Price is dictated by the market. Me as a hodler, I might choose to enter the market if the price is right, but I'm not setting that price, right? The market has to set the price and then it invites me to enter it or not. And that's extremely important as well. A lot of people think that hodlers set the price. I might have a price. I might say I'm not selling a single Satoshi until Bitcoin's $5 million a coin. So my market is 5 million. Now the actual market has to either catch up or tell me to go fuck myself, and we can decide, we can negotiate on where we're going to settle on that. And that's really how pricing works in a market, and it's important to understand that. And at the peak, as Bitcoin is going up through the roof, the bull market multiple is 118 to 1, according to Bank of America, not $1,000 net worth at Twitter anonymous profile or Twitter analyst, right? There's no Twitter analyst here wearing chunklers that's going to, in my mind at least, give me a better analysis, data analysis. I'm not talking about perspectives and things like that. I think a lot of people on Twitter are a lot better than the banks on that. But data analysis, I would much rather trust Bank of America's numbers and then readjust for my risk tolerance based on Bank of America's numbers than any Twitter analyst. So the beautiful thing about this whole thing is that despite the bull market multiple, despite what you think is going to happen to price, despite what I think is going to happen to price, there are only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, you shut the fuck up. And step number 3, you get fabulously wealthy.